Hello everybody, welcome back. Let's have a look at Bitcoin and we'll make some videos because we've got a bit more time today, make some more videos on some of the small cap altcoins, which I have to say aren't, looking good at all, but it's about making that plan, the plan we've been talking about for ages, to focus on Bitcoin, collect up your Bitcoin like Sonic the Hedgehog, picking up the rings, and then we'll amplify whatever it is that we own in Bitcoin with these altcoins later on this year, not now, definitely not now. So for Bitcoin, we're coming down to test it's the $33,000 range, which is, it's not like a absolute be all and end all center of anything, but it is on the weekly where the 50 exponential moving average is, which signifies to me the bull or the bear market either continuing or coming to an end. Now we can go below here, that's fine. We've had wicks below here all this time. It's about closing candle bodies on the weekly above there. That's the main thing. That's what we're looking to try and achieve here. And even if we do break down from it and close weekly candles below it, well, I mean, it's not going to look good. And if we get rejected from it on a weekly candle or just in general, then we might be thinking about much lower for Bitcoin. But for the moment, we're still in this range. It's all about the range, yeah? The boring sideways range. So we got the inside range, where the majority of the price action takes place, and the outside range, which is between 28 and 49. So the top of the outside range hasn't yet even been attempted, really. We've not been able to break through the upper portion of the inside range, which is about between 40 and 42, thereabouts. Give or take a few $1,000, But basically, with this kind of setup, it's not really looking like it wants to break up to that far up in general at the moment anyway. So when we're looking at all these oscillators, what we can see is there is signs of not strength, but not particular massive amounts of weakness. It's basically wanting to go sideways for probably a little bit more time. I'm not looking for this to break down massively, but I have layered out areas of significance. Now, the one thing I always say, it's almost like a catchphrase, is that wicks tell a story, whether we got wicks at the top or wicks at the bottom, and this shows that the wicks, they are being bought up. There is buying pressure down here. It's not enough to cause any kind of uptrend, and it shouldn't be at this stage. There shouldn't be any V-shaped recovery. That's not what we're looking for. But what we are seeing is buying pressure at the towards the outside range, basically the 28,000, the 30, below the low 30s, and definitely the upper 20s. Now, what I would like to see, it doesn't mean that it's going to happen, but based upon what we see here, which is death cross on exponentials plus conversion baseline cross, which is a short signal on a daily, would be that this should take down back down to 28,000 and then some, and then we'll see some more of these wicks. Now, people talk about the Wyckoff reaccumulation or whatever you want to call it. At this stage, people are waiting for something called the spring, right? Some people thought that this could be the spring, and it might be the spring, but I don't think it would be. And I'm not really into all of that sort of Wyckoff stuff or Elliott waves and things. It's not really my thing, although I do appreciate that they are quite powerful ways of trading. But from what I can see, whether or not we are going to get a spring, we have to focus on the fact that we're going sideways. We're looking to test the lower side of the range, the 28,000 again. We may see a wick pierce that and go all the way potentially down to around about 23, which could be the spring that everybody's referring to. Now, like I say, wicks tell stories. There's plenty of wicks here. There's plenty of buying pressure down here, despite the chart looking, well, bearish, really. There's no getting around it. It's a bearish chart. We've got a short signal. We've got exponentials crossing. We're below the lower side of the Bollinger Band. It's bearish chart, but bears can only take it so far. Now, if we go into a bear market, that's different. We'll have a continuation of a bearish trend. Doesn't mean that we'll instantly nuke all the way down to wherever it is that people expect it to go down to. I hear some people talk about $4,000. I think that's a bit over optimistic. I mean, I wouldn't hold out for such a call. I would personally think that the lowest levels are probably between maybe 12,000 at its absolute low, but this blue box zone is probably the lowest I would expect it to go. Now, if we enter into a bear market, that would be another, I don't know, 9-10 months worth of downtrend with pumps in between that, significant ones as well. So it doesn't mean it's just going to constantly go down. And if you think about that, you go, well, it will go down to 4,000. It probably will never go down to 4,000 again. And it's difficult to say something will never happen again, but I would be very surprised if it broke down below 12,000 ever again. And if this is just a reaccumulation, it might never even get to 20,000. But we have to, I suppose, make the assumption that it could. But at the moment, we do things level by level. So again, just to recap, we are sideways and down. We are looking at short signals on the daily. We do have death crosses on exponentials and simple moving averages. We're below the cloud. There's pretty much everything I would look at this chart to suggest that it's the opposite of bullish, which I guess is bearish. But it's not particularly massively weak despite everything that we're looking at. So with these buying pressure wicks, I think that any stab down we get will have a significant bounce on it. And if we just have a quick look at the RSI here, I mean, it wants to creep up. It definitely does want to creep up. And if we do get another low point here, like another flash low, and we remain above, I suppose, these last lows on the RSI, that would lend itself to us, what could be the spring that everybody's talking about, the Wyckoff, I don't know what you call it, accumulation end point, where we basically get that another low printed, which then we spring from there and actually reverse from there, and that marks the low. We've got the bullish divergence on the RSI on the daily, but every other aspect of this is bearish. So be prepared for a new low to be formed, and for that low to probably get bought up quite quickly. But catching knives is obviously always going to be dangerous. Let's not put all our life savings on such a gamble. But overall, I'm not a massive bear on Bitcoin, despite the chart looking bearish. So don't underestimate the fact that it is a bearish looking chart. Anyway, I'm going to leave it with you there. I'll make some videos on some of these small micro caps, and before I even do that, I should say we're not looking to be buying them now. We're putting them on the map, on the radar, because we are expecting some big moves towards the end of the year for altcoins, micro caps especially, but we do not want to be buying into them now. Doesn't even, no matter how good you feel that the technology is, if it's going to life change, it doesn't really matter. The chart is the main thing to focus on for me, not the fundamentals really. Anyway, thanks for watching. Hope you have a nice day. Take it easy.